We'll be getting started in just a second. And I think we should be live on Facebook. Hi everybody, welcome to this weekend's video. I'm Sami Abusad, Director of Education at T3 Live. Hope you're doing well. We're gonna go over the charts, go over the market, and go over some swing ideas for next week. But as always, before we start, I have to share with you a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, if you'd like to download a copy of my free ebook, link for that is in the description. But without further ado, let's turn on the charts and get started. We're gonna talk about the market first, and then I'll go over the swing ideas for next week. The watch list, bullish and bearish, was copied and pasted into the description of the video. So if you don't want to type it up one by one, go down to the description and get it from there. Okay? If you find benefit, and it is on fire. Okay, so the Nasdaq is really on fire. SPY is on fire too. It's really bullish too. It's only the IWM that's lagging. If you look at the IWM, which is the Russell 2000, it's basing at the all-time high. So I am expecting it to break out at some point, but it really has not participated at all the whole year almost, since at least sometime in February, beginning of February. It hasn't really participated, but basing at the all-time high, so that's bullish. If you look at the $5 trillion plus companies we have in the US, they're all technology, and look what they've done, right? Look at how they're doing. We got Apple ripping, Microsoft all-time high. Amazon is actually getting ready to break out. If you look at Amazon, it's basing at the all-time high. So what does that tell us? Higher still. I'm not sure why. I guess there are some dropped frames. So I hope you can all hear me and see the picture clearly. But my app is saying there are some dropped frames. So I'm not too sure. I'm going to continue and I'll check the quality at the end. But again, hopefully you're able to see the chart clearly and hear me also clearly. So Amazon is about to break out. Google all-time high. This is the weekly chart. But Google all-time high broke out just yesterday. Facebook is the newest trillion-dollar company, all-time high too. So the market is really all out bullish. And with that said, I am expecting to see more of the same. Okay, I'm expecting to see more of the same. And if the market, because especially the Qs, the Nasdaq is a bit extended, if it pulls back a little bit, then I bet you the IWM will start to break out. Meaning, I don't think money is gonna start to leave the market. Instead, it will just rotate. It will go from out of the Nasdaq, maybe out of the big five and into the small cap. Okay, so that's what I'm envisioning going forward, at least for the time being. And I'm well aware of all these big names that have been saying, oh, the market is gonna crash. Look, they've been wrong forever. There's nobody that I know of that's more bearish than me when it comes to when the market turns bearish, but it's simply not bearish. Okay. So, you know, I just read an article about that guy, that Michael Berry, I guess is his name, the guy that predicted the, you know, from the movie, the Big Short, the guy that predicted the financial crisis. And the article was by somebody who was a big fan that actually went back, I think 15 years and looked at his calls. They were mostly wrong. When he was right, he made the big money. But for the most part, he's been saying the market is going to crash for a long time. It hasn't. Or if it was going to, it already did last year. And so for the time being, I just don't see it happening. By the way, it is true that professionals are wrong just as often as novice people. Just about. The difference is when professionals are right, they make the market pay. They make the big money. Richard Dennis, I learned this from Mark Douglas. Richard Dennis, the guy that created the turtles, that made reportedly $100 million in 1 year, his students, was wrong. It's what Mark Douglas said. I don't know that for a fact. He was wrong 85 to 90% of the time. He was only right 10 to 15% of the time. But he pyramided on the way up, and so when he was right, he made the big money. That's how you make money in the stock market. Not by being right, because it's not really possible. Those that claim that it is, I challenge them to show you their statements, to show you their records. But they won't. What does that tell you? Because it's really hard to be right. That, it's really hard to have a very high hit rate, a batting average. What's not hard is to make the market pay you when you're right, to hold on to your winning trade. Okay? All right, back to the charts and let's get started. We got ADMS. This stock has been basing at the lows for a long time, but as soon as the IWM breaks out, I predict the ADMS will break out. So I like it over the base, stop under the base, and then target on this really has room to $10. This is a pattern that I do all the time. One of my best trades this year was the PRTA. It should have been better than what it was, but that was one of my best trades from $15, and as you can see, it's 50. Notice on the monthly chart, it's the same. GSM on the monthly chart, still bullish, the same. I played it a couple times also, the GSM. BKEP or something like this, BKEP, the same kind of pattern as the ADMS. That doesn't guarantee that the ADMS will perform the same way, but it's the same pattern. So I like it over the base, stop under the base. Perhaps not quite ready until the IWM breaks out, but the entry for this would be over this bar's high, which is 572. Okay, the stop, it would be under the base, which you check the lowest point in the base, which is 484. Okay, that's the ADMS. ATRA has a monthly buy setup. Check it out. That's a beautiful monthly pullback. It's pretty deep. This reminds me of the BKI, similar to the BKI that I'm in. Deep pullback, but starting to move up nicely. This was called a couple weeks ago in one of those videos also. And ATRA is similar. It triggered already and reached target 1, but I like it as a replay or a re-entry over 1618. Okay, with a stop under 1526 as a longer term play. BMY does not look that good on the daily, but it looks really good on the monthly. So if you look at the monthly chart, it's been basing for over a year and a half to be exact. So I like it over the base with a target around 75. It's 76 something, so $76, and then the stop may be down here. Not a lot of reward to risk off the monthly chart, so I think this is better played off the daily with an entry just over this most recent base, and then the stop under this pivot. Okay, again, target is $76 on the BMI. CCX or CCXI rather, I already played it as a breakout. It worked okay, but it does have another buy setup now over 1402, stop under 1289. Target, that little bar, see it, the bottom of it, which is around $24, $24.60 or so. So I like it on a pullback. A CRM, I think, is going to be the next big company to rally hard. Notice how it's already moving up. I like it over for a swing just over the most recent base. So over 249, 248.96, call it 249. Stop under 238.89, and I like it higher to the all-time high, which is about 284.50. 284.50. That's a CRM. CXM is a relatively new stock and has a pullback, a nice decent pullback, long over the red bar's high, stop under it. So the entry for this would be over 2145, stop under 1913, and the target is the prior high, as is almost always the case when you have a pullback pattern. The very next one is the same kind of pattern on the daily. It's a pullback. So the entry for this would be over 1254. I like it even more than the CXM. Stop is under 1112, and the target, it's basing at the highs. If you look at the weekly, it's been basing. So this doesn't have a target. You would just have to manage it. It's it's basing basically at all-time highs. So this would be, the target would be off the chart. It would have to be managed. That's the GAME. GROY, this was an amazing gap. Had the big gap over a couple of bars, red bars, and then it put in a narrow range bar. So I like it over this bars. I liked it over this bars, but I didn't do it because I've never ever traded this stock. I guess it's not that old, that's why. So I wasn't familiar with it. It popped really hard and then came crashing down. And now I have an opportunity to get in it over 606, stop under 580 as a 1, 2, 3 pattern. So I like it. I like it. HOLI is a base breakout. It's not a very nice base on the daily chart, but if you look at the larger time frame, it's a transition A. Okay, it's a breakout on the monthly. So I like it just over this most recent base, which is over 1518. Stop. One could put it under 1422. Okay, it's not one of the ones that I picked for myself and the newsletter, but I like it over the base. Stop under 1422. Next is the HZNP, which already triggered last week, but it hasn't gone anywhere. So I still like it higher, 93.15. So again, over 97.01, stop under 93.15. HZNP is basing at the all-time high, so I like it higher. Next on the list is the KYMR, and it's another 1, 2, 3 setup, meaning igniting bar is bar number 1, resting bar is bar number 2, and if it takes out, if it goes above those bars, the high of both bars on Tuesday, since Monday is a holiday, then it's a 1, 2, 3 pattern. A little base breakout basically. Target on this is up here around $78 or so. Okay, on the KYMR. MAC already played it a couple weeks ago, maybe a month ago actually, on the base long stop right here, and it trailed out right here. Okay, already played it as a swing, but instead of coming back down after trailing us out, it actually based up the highs. So I like it one more time over the base long, over that red bar's high, 1888, stop under 1780. It's a $1.10 stop. Like it on the weekly chart, that's the weekly time frame, and I also like it on the monthly time frame. Okay, already played it in late May, I guess, but I still like it higher over the base. PAYA is a 1, 2, 3. So long over 1155, stop under 1133. It's a very tight stop, and the target is not going to be that big, but basically, well, actually that's pretty good. I would say $13. I wouldn't expect it to go beyond $13 initially, at least. So it does have a pretty big reward to risk ratio. So not bad, not bad. SLCA is a longer term play. If you look at the monthly, looks good. It had that successful transition A breakout that I like so much, and now has a pullback. So this reminds me of the CN, which is, I think, doing okay. It dropped on Thursday, but it's the same kind of pattern. It's a big base breakout. Notice the shakeout right here. See it? That breakdown failure. Well, SLCA is exactly the same. It's a big base with a breakdown, a couple of them, that failed to follow through to the downside. So I like it a lot as a longer term play over $14. Okay? Over 14.01. So let's say 14.05. Again, as a long term play based on the monthly chart. So not a swing, not just for a few days, but more as a long term play. SNAP is Snapchat. Is basing also at the highs. It has a 1, 2, 3 on the weekly chart. So like it higher over 69.29. Stop under 65.75 as the 1, 2, 3 on the weekly, and target 1 would be the all-time high, which is 73.50 for target 1. Target 2 off the chart. It would just have to be managed. I don't know what target 2 is. TRIL is a monthly buy setup. Now that's a really deep pullback. I talked about the BKI being an open play, that it was a deep pullback, BKI. Okay, but I mean that's really deep. So it's not one of the ones that I picked for myself for the newsletter, but I'm gonna be watching it because it does have a monthly buy setup. By the way, because the market is extended a little bit, I'm not taking too many long trades. Now I already have a lot that's open, and I believe with the exception of one open position, every single position is in the money. And so if the market starts to pull back, okay, if the big tech companies start to pull back a little bit, I'm going to start to exit some of these swings. So I don't want to be starting a lot of new long plays without seeing some kind of some kind of basing action or a pullback in the market. So I'm actually, if you're a subscriber and you want to check the newsletter, it's already the table's already completed with the new plays. You'll see that I skipped most of the watches. I put them out as ideas if you want, but I don't think it's very advisable right now to put on too many long plays, simply because the market, especially the Nasdaq, is a bit extended. So we might be due for some kind of a pullback. All right, back to the charts. AFMD, the shorts now. AFMD is a 1, 2, 3. Had a terrific gap down on Thursday. Broke under a base, looks good, and has a 1, 2, 3 short. So under this bar's low, stop above it. Short under 723, stop over 765. Target the 200 MA for target 1. Maybe it drops a little bit below to reach 611, which would be the support area. But the 200 MA, that's the red line on the chart, does act as support often after a big drop to it. So I would say that would be target 1, target 2, maybe 611. BDTX is basing at the, I don't know if it's at the all-time low, maybe it is. Yeah, it is at the all-time low. So guess if a stock base is at the all-time low, it can't get off the lows. That tells me most of the time it's lower. So I like it short under the base, stop above it. Okay, give it room, because this thing, I've tried it before. It just doesn't go. Hasn't gone anywhere for the last couple months. So, I would give it some room on the stop, but the stop should be over $13, okay? And then the entry should be under 11.90 or so. Camp is a base breakdown. It looks good, but it's not a very tight stop. So entry right here, stop right here, and then target the prior low around 1150, maybe 1150, I would say. HYMC, tell you the truth, I'm already in it. It's extremely illiquid, very thin, but I like it lower. It needs to break that 1, 2, 3 that it formed on Thursday and Friday. So under 280, stop over 334, but it's extremely thin, extremely illiquid. LEDs, LEDS, has a 1, 2, 3 after a breakdown. So short under 1550, stop over 1750. It's got a $2 stop. It's pretty big. Target is $10. So it does have $5 at least until it gets to target. And RAD had a very bearish gap down a week and a half ago, and then now is basing at the lows. Similar to the camp, it's not the tightest stop, but it does look lower. It's basing under the support, so the next support area is way down here. And remember, stocks move between support and resistance areas, meaning when they move up, they usually don't stop unless they go climactic, as this one did, or they reach resistance. On the way down, they don't usually stop until they reach support, or they accelerate, and you get that, that climactic sell-off. And so on the RAD, I really do like it all the way down to that initial where the stock rallied from, which is about $11. So it has plenty of room to go. All right, well, I rambled a little bit in the beginning, but I hope you enjoyed today's video. And if you stuck around until the end, I really appreciate it. I want to say happy 4th of July. Have fun, be safe, and I'll talk to you next week. Take care, everybody. Ciao.